Hello everyone, welcome to Economy Simplified Series of Drishti IAS. My name is Disha Bhatt, and in this video we will be discussing about balance of payment, one of the most important topic of external sector. Okay, and UPSC has asked a lot of questions from this particular topic. For example, in 2014, direct question was asked from the balance of payment. Okay, so in order to solve these kind of questions, it is very important for you to have a conceptual clarity, and that's what we are going to do in this particular video. So let us start with the news. So as per the SBI research, what SBI research says, it says that the India's balance of payment is expected to record a surplus of around 50 billion US dollars in financial year 2027. It is a positive news for us, okay, that we are going to experience a balance of payment surplus of up to 50 billion US dollars. But at the same time, India's current account deficit is expected to remain around 1% of GDP. Now, isn't it contradictory that on one hand, we are about to experience a current account deficit of up to 1% of GDP, but on the other hand, at the same time, we will be experiencing a balance of payment surplus. Now, the main question is, can both these things, can they happen at the same time? The answer is yes. How they will happen at the same time? What is the reason? How they can occur at the same time? You're going to understand it by the end of this lecture. Okay. So to understand this, let us start with the basics. Let us understand what is balance of payment. Let us read the definition. So balance of payment is a systematic record of all economic transactions between the residents of a country and the rest of the world during a specified period, generally 1 year. Okay. As you know that India is an open economy. India do a lot of economic transactions with the rest of the world. We do import a lot of goods and services from the other nation. At the same time, we also export a lot of goods and services to the other nation. We receive a lot of investments in the form of FDI and FPI from different countries, right? So this is an example of economic transactions which India is doing with the rest of the world. When you record these economic transactions systematically, okay? When you record these transactions in a systematic manner, okay, done by the residents of a country. Residents are whom? As per the Income Tax Act, an individual is a resident when he or she is living in India for more than 182 days. This is a criteria you need to fulfill to become a resident of a country. Okay. Now, when these economic transactions are made, when they are maintained systematically by the residents of a country and rest of the world during a specified period, generally 1 year, this is called balance of payment. Are you able to understand now? Okay. Always be mindful of the keywords when you read any definition. Let's say we have read the balance of payment. Okay. So be mindful of the keywords. Here the keyword is resident and 1 year. Now an examiner can trap you. What he or she can do is they will change the definition, and instead of resident, they will mention you the citizen. And the students who have not read the definition conceptually, they will mark it correct. But you don't have to make that mistake. It is important for you to read the definition systematically. Okay. So always be mindful that residents have been mentioned here. Okay. So all the economic transactions done by the residents, done between by the residents and rest of the world, between residents and rest of the world is called as balance of payment. Okay. So BoP tells us that how much foreign exchange is coming into the country and how much is going out. In some cases, India imports a lot of goods and services. India imports a lot of goods and services. Now, in this case, there is an outflow of money. Money is going outside of the country. In that case, it becomes your payment. If we talk about exports, now here, exports are the receipts for our country. Here, in this case, in the case of exports, when you are selling something to the other countries, you will receive foreign exchange in return, right? So, there is an inflow of money. And they are called your receipts. Okay. So in this way, BoP tells us that how much foreign exchange is coming into the country and how much is going out. All right. Now, who undertakes these transactions? The government undertakes these transactions. The businesses undertakes these transactions, and also individuals also undertakes these transactions. Okay. Let us understand this with the help of example. Let's say that the government has received a financial aid from the World Bank. So, is this an example of economic transaction? The answer is yes. It is done by the government side. Okay. Let's say if there is a Indian company, it's a textile company, and that textile company has imported a machine from Germany. Is this an economic transaction? The answer is yes. It is done by the businesses and firm. Now let's say that there is a person whose name is Rohan. He is very rich. He has purchased a watch from a different country. He has a lot of money. So in this case also, a transaction has been done by the individual. Will it be counted under your BoP? The answer is yes. It will be a part of your BoP. Okay? Alright. Now, another important information. The global balance of payment is zero in aggregate because every international transaction has two sides. One country's receipt is another country's payment. Okay? Let us understand this with the help of example. Let's say that India exports goods worth 100 million to the US. India has sold goods worth of 100 million US dollars to the US. Now, obviously, if India has exported goods to US, in return, India will receive a payment 100 billion US dollars, right? So, there will be a plus sign because we have received a payment. But on the US side, US had made the payment, so there will be a negative sign. If we will add these two transactions, the answer will be zero. That's why the world balance of payment is always a zero. Okay, so always remember this thing. Now, I have told you that balance of payment is an economic transaction. It's a systematic record of the economic transactions done between the residents of the country and rest of the world. But I also want you to notice one thing, that transactions are of different categories. The nature of transaction is different. Let's take an example. On one hand, let's say that India is exporting its software services to the US company. Here also we are receiving a payment because India is selling its software products to the US companies. And on the other hand, let's say that the Apple company is investing in Indian market. Apple country is building factories in Indian state. Here also we are receiving a money. But can you spot a difference that the nature of transaction has changed? In first example, India is exporting its services to the different countries. In the second example, India is receiving an investment. That is an example of an investment. Okay, so on the basis of transactions, BoP has two types of account. Okay, BoP has two types of account. First one is current account and the second one is your capital account. And different types of transactions are recorded in these two accounts. Let us talk about the current account first. The current account record transactions related to the flow of goods, services, income and transfer. Here you have to learn these four components: goods, services, income and transfers between India and rest of the world. In simple word, it tells us what India earns and spends through its regular international economic activities. Now there is one feature of current account transaction. What is that feature? That current account transactions are regular in nature. They are regular in nature. That's why the name is current. The frequency of these transactions are on a higher side if we compare it to the capital account. Okay, so frequency is on the higher side. Alright. Now, how will you remember the components of current account? I am going to give you the keyword, that is GST and I. G for goods, S for services, T for transfers and I for income. Okay. Now all these transactions are regular in nature. Take an example of your home. Okay. Every month you buy groceries for your home. Similarly, India also imports and exports a lot of goods and services to the other nations. Now this transaction is regular in nature. Okay. So whatever trade we are doing in goods and services is a part of your current account. Along with that, whatever the income we are earning from the other countries. Now in income, I mean dividend, interest. Let's say that I have invested in a shares of a US company. I have purchased the shares of a US company. Now, if I have purchased a share, obviously I'll earn a dividend. Now that dividend is an income for me. Okay. So that income will be recorded in your current account. Similarly, whatever transfers have been made, that will also be a part of your current account. Now, what are transfers? See, transfers are unilateral in nature. For example, let's say that your father is working in a US company. He's working in a US company and some part of his salary, he's sending it to your family. Okay, so that is a transfer, that is a remittance. Okay, so that will be counted under your transfer. So always remember, if we talk about current account, these 4 components are the part of your current account, that is GSTI, goods, services, transfers and income. Okay, if we talk about capital account, the transactions in capital account are completely different from current account. See, the capital account record transactions involving assets, investment and capital flows between India and rest of the world. In simple words, it talks about the investments, borrowings and NRI deposits. These 3 are the part of your capital account. Let's say that if any Japanese company is investing in India, if the Japanese company has acquired stocks of an Indian company, so that is an investment. It is also an example of an economic transaction. In this case also, India is receiving a receipt. India is receiving a money. There is a money inflow happening in our country, but it will come under your capital account. Now the frequency of these transactions are less as compared to current account. Okay, so what are the major components of capital account? Foreign direct investment, foreign portfolio investment, external borrowing, loans and NRI deposits. Okay, sometimes the NRI also kept certain amount of money in Indian banks. So that is an example of your NRI deposits. In the similar manner, let's say if the Indian government has taken a loan from the financial institution, from the international financial institution, that will be counted as under your capital account. Let's say India has given loan to any other country. Let's say India has given loan to Sri Lanka. That will also be qualified under your capital account. Now let us discuss that what if, let's say that the Indian government has taken a loan from the World Bank. Now obviously if you are taking a loan, if you are borrowing money from the World Bank, you need to pay interest on that amount, right? So interest will be calculated under, interest will be entered in which particular account? Will it be entered in the capital account or will it be mentioned under your current account? Do answer me in the comment section. If you know the answer, do write down in the comment section. Okay. Now let us talk about the difference between capital account and current account. See, current account deals with the income and expenditure from international transactions, right? GSTI, the keyword which I have given to you, you can remember it from there. Capital account deals with the capital and financial transaction between the countries. What it records? It records GSTI. What does capital account records? Capital account records investments, loans and changes in the assets and liabilities. What is the purpose of current account? It shows the country's earnings and spending with the rest of the world. It shows how the country finances its deficit or invests abroad. It talks about the investments and borrowings. All right. Current account record income from the investments such as dividend and interest. Okay. Now, I have asked you a question that where the interest will be recorded. If you have borrowed a money from an international financial institution and you will pay the interest on that particular borrowing, where that interest will be recorded? It will be recorded in current account. What is the reason? Because the frequency of this transaction is on a higher side. Okay. All right. Now, if we talk about capital account, it records investment itself such as FDI and FPI. Now, let us talk about the borrowing part. Interest paid on the foreign loan will be a part of your current account. Similarly, principal amount of foreign loan will be recorded under your capital account. Let's say India has borrowed 2 crore rupees from the World Bank. Now, one day India will return the principal amount. Now, that transaction will be recorded under your capital account. Okay. Now, examples of current account is export and imports of goods, IT services, remittances, and interest received. If we talk about the examples of capital account, it is FDI, FPI, external borrowing, purchase and sale of foreign assets. Okay. All right. Now let us talk about the 3 different concepts. What is balance of trade? See, balance of trade is a difference between merchandise exports and merchandise imports. A negative balance of trade is called as trade deficit, while a positive balance of trade is called as trade surplus. If we talk about balance of trade, okay, I'm talking about balance of trade. Balance of trade is difference between exports and imports. Now, India exports a lot of goods and services. On a similar manner, India also imports a lot of goods and services. But here we are not talking about the services. We are only talking about the goods. Okay, because here merchandise word has been mentioned. Merchandise means what? It talks about the visibles. That means what you can see and touch. So here we are not talking about your services. So always remember, if ever in the question it is mentioned that balance of trade also includes services, you will mark that statement incorrect, because balance of trade only talks about the merchandise exports and imports. That means exports and imports done only in the category of goods. It does not include services. Now what it says is, see, if the balance of trade is negative, that means if our imports are greater than exports, then we get trade deficit. Okay? Trade deficit occurs when the value of country's import of goods exceeds its value, its exports value. Okay? Similarly, if our exports are greater than our imports, then what do we get? We get trade surplus. When a country's exports of goods exceed its imports of goods, it has a trade surplus. Now, obviously, trade surplus is the favorable situation for our country. Okay? Trade surplus tells us that the country is exporting more goods than it is importing, meaning that it is earning more from the merchandise exports than it is spending on the merchandise imports. All right? Okay. Now, let us talk about the current account deficit. Now, here what you have to remember is that current account deficit is a broader concept than balance of trade, because balance of trade only talks about imports of goods, imports and exports of goods. It does not include services. Balance of trade does not include services. But if we talk about current account deficit includes a lot of things. It also includes goods, it also includes services, it also includes transfers and income. So current account has more components than balance of trade. So automatically current account deficit is a broader concept. Okay? Current account deficit occurs when the total payments arising from current international transaction exceed the total receipts. Whatever components does the current account has, that means, let's say if in amongst those components we have done more payments as compared to receiving the receipts. Okay, payments are greater than the receipts in current account deficit. All right, a country can have a trade deficit but still have a current account surplus, because services income transfers can offset the trade deficit. All right. India can have a trade deficit, but at the same time, India can also have a current account surplus, because current account surplus has other items as well. It has income, it has transfers, and it has services as well, which can offset the trade deficit. I hope you are able to understand this concept. Now, let us talk about the trade deficit, current account deficit, and the overall BoP deficit. What is the difference? See, if we talk about trade deficit, it only means that the import of goods is greater than the export of goods. It only talks about the goods. So it is a narrow in concept. It is narrow in concept. It's a narrow concept, right? If we talk about current account deficit, it talks about the current account deficit happens when current account payments are greater than the current account receipts. Okay? If we talk about BoP deficit happens when overall balance of payment is in deficit after considering current plus capital financial transactions. Okay, so BoP is wider in concept while trade deficit is narrow in concept. Now let us get back to the news, what we have studied previously. See, it says that we are having a balance of payment surplus, but we are having a current account deficit. Okay, how can we have a BoP surplus? Because BoP has two components. It has current as well, it has capital as well. So even if we have received a deficit in current account, it might be a possibility that our capital account is having a surplus. We have received a lot of investments from the other countries. So I hope this question or this query has been resolved and you are able to understand the difference. Okay, now let us try to solve this particular question. With reference to the balance of payment, which of the following constitutes the current account? Here few components are given to you. You have to tell that which of them are the part of your current account. Okay, first balance of trade, second foreign assets, third balance of invisibles. Invisible means your services. Okay, visibles are goods, invisibles are your services. Fourth, special drawing rights. Now, amongst which of these components are the part of your current account? You have to answer that in the comment section. Select the correct answer using the code given below. Option A, 1 only. Option B, 2 only. 2 and 3. Option C, 1 and 3. Option D, 1, 2 and 4. Now write down the correct answer in the comment section. I hope you liked the video. Thank you so much for watching. Have a good day.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.